Manisha, thank you very much for that. I remember the time in April 2020 when crude prices were negative. WTI crude prices were at minus $37 per barrel. This was in April 2020, which basically means that oil producers were paying buyers to take the commodity off their hands because they feared that storage capacity would run out 1 month later. That was the extent of demand shock, and it was so overwhelming that for the first time we had an asset class going into negative $37 on crude prices. But oil really has been at the heart of this conflict. Now, Russia, as we know, has historically been the largest provider of both oil and natural gas to Europe. So Russia sends its natural gas to Europe via pipelines which run through Ukraine. So there is a Nord Stream 1, Nord Stream 2 pipeline is also going to come up, which is going to connect Russia and Germany, but it's still awaiting Germany's approval. So basically what happens is Russia pays Ukraine about $2 to $3 billion as a gas transit fee, which is equivalent to 3% of Russia's GDP, which eventually Ukraine uses to arm itself against Russia. So effectively, Russia is paying Ukraine to fight with Russia. But this $2 to $3 billion that Russia pays to Ukraine is also at the heart of the financial conflict, apart from, of course, sovereignty and independence, etc. But staying with the Russia-Ukraine crisis and the impact on equity markets, we're now joined by Hemang Jani of Motilal, Oswal Financial Services, to discuss his approach to this entire saga. Hemang, thanks so much for joining in. Manisha was just telling us about how agricultural commodity prices have shot through the roof because Russia is such a big producer of so many of these commodities. Now, you're putting the spotlight on barley. Why is Russia important to barley's production and the impact it has?
So, Rima, Ukraine is amongst the top 5 global producers of barley, and it accounts for almost about 18% of the exports in CY22. So, with the uncertainty around Ukraine, there is a possibility that the disruptions could continue, and commodity which was already going through roof can see some further spike. And for the companies like United Breweries and United Spirits, to some extent, this would definitely have some adverse implications in terms of the raw material prices going up.
Hi, Hemang. Good morning. So you mentioned United Breweries. One is the barley price, but you're also talking about the bottling price. So take us through your call on United Breweries and how much of a downside do you see from here?
So yes, it would be a little surprising for people to know that, the bottling cost as a percentage of total cost for UBBL is almost about 64% in 21. So with increase in the prices, because the bottle manufacturing constitutes lion's shares, in the overall cost, and with crude price going up, there is going to be a significant impact there. So we think that both the barley prices and the cost of bottle manufacturing will have some adverse implications for names like UBBL and United Spirits. We are looking at a price target of about 1,200 for UBBL and about 920 for United Spirits.
But India doesn't source its barley from Ukraine, right? We source it locally. So therefore, is there really so much of an impact, and wouldn't there be long-term contracts in place, Hemang?
So what happens, Rima, is that the domestic prices will have some linkage to what's happening globally. And I'm not too sure whether any of these existing companies, they are sourcing their raw material entirely from the domestic market or they are importing. But given the way the commodity prices have really shot up, there is going to be the risk of the prices in India also go up. So there is going to be that risk for these companies.
And you said bottling cost, the cost of bottle and the entire process is about 65% of the overall raw material cost. Now, for a company like United Breweries, what is the percentage of barley cost to their overall, cost pressures?
So barley cost for a company like United Breweries would be about 30%, and that price has gone up about 65% YOY and 5% quarter on quarter. So in terms of the overall impact, it could be quite severe.
You know, Hemang, we've been speaking to a bunch of global guests. A lot of people seem to think that this is a very, it's not going to be a long-term issue, right? It's not going to last beyond a couple of weeks. In that situation, do you think that maybe this is more a wait-and-watch situation on these stocks, and then you could take a call on how much the raw material price could go up and how much then, of course, it'll affect the margins, or do you see it sort of extending beyond these couple of weeks?
So part of the increase we can attribute to the immediate escalation and Russia-Ukraine saga. But we have to keep in mind that the inflation and particularly the commodity price inflation is a phenomena which we are witnessing for almost now 15 months. And for all you know, it may continue for some more time. So I do not think, one should really feel that this is just a small, short-term kind of an impact. It may have slightly larger implications as well.
So for United Breweries, it's very leveraged to both barley as well as the bottle costs, right? 35% of its costs are linked to barley, which has gone up 60% year on year. And the balance is linked to the bottling costs. And we know where crude prices are. But for United Spirits, it's linked less to barley, but more to a compound which is called ENA, or raw material called ENA. Can you tell us the impact on United Spirits?
So for United Spirits, because a large part of their sales comes from premium above segment, they have to use new glass, and they cannot use the recycled one, where the impact of the glass cost could have some implications. Apart from that, we are seeing that though to a lesser extent, but even for United Spirits, the raw material prices, the ENA prices are also inching up because of what's happening to global commodity. So relatively, United Spirit is better off, but in terms of a severe price increase, they will also have to compromise on their margins, at least in the near term.
Hemang, you also have downgraded BPCL, and you're talking about the inability for them to pass on these costs. So take us through that, because normally in a situation where crude prices are decontrolled, right now of course we have the election, but normally in a situation where crude prices are decontrolled, they would have really sort of shot up, right? Last year, when we saw that big crude price move, we saw 43 increases by BPCL or HPCL, only 4 cuts. So do you think this election problem, the fact that there are 5 states which are undergoing elections, is quite a temporary problem?
So the larger question is that you have elections, at different points of time, and these companies are not allowed to take price increase, which puts a question mark on their freedom and this entire, APM thing, which was dismantled. You have larger investor concern on that entire freedom and autonomy to the, free price environment. Apart from that, you're seeing that the divestment also, we've been hearing that last 1.5 years that, this will actually materialize this fiscal, next fiscal. It keeps on, getting delayed, which again is sending a wrong message to the investors. So though in terms of fundamental, once the crude prices cool off and the companies take the price hike, things will look better. But from an investor perspective, the entire, freedom and the ability of these companies to run in an autonomous manner is what is, driving the derating that we are seeing. And that is why we have downgraded BPCL to neutral with a price target of 413 rupees.
Okay, what happens to its divestment is also going to be a billion-dollar question. Hemang, thank you very much for putting the spotlight on how the Russia-Ukraine saga impacts the alcohol beverage stocks. Their target price